Ticker symbol SVOL or SVOL, the Simplified Volatility Premium ETF, is an ultra high yielding ETF that I've been buying for several months now. And so far, I personally have spent north of $15,000 investing into this sort of complicated ultra high yielding ETF. Now in this video, I want to go through this ETF and share with you guys a lot of things that most investors have no idea about this ETF. But along with that, I want to share with you with my position of SVOL, because now at this point, I do own hundreds of shares of it. I want to share with you guys how much this ETF single-handedly is paying me in income per month, because it's pretty shocking. So if you're interested in ultra high yielding ETFs, and specifically ones that can offer you potentially massive distributions with a little bit of money invested into it, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first things first, as you guys can see right here in my long-term portfolio dividend tracker, when it comes to SVOL, I have around 700 shares of it with an average cost per share in the low $22 range. Now this means that at this point, I've spent around $14,000, $15,000, $16,000 on my shares of SVOL, which currently generate me anywhere from around $180 to $200 per month, depending on what the distribution rate is. Now that's a massive distribution, considering again, this is just around a $15,000 investment. But I mostly specifically wanted to make this video because in the past I have talked about SVOL. This ETF has changed a little bit over time in multiple different ways, and I wanted to personally address everything. So without wasting any time, let's go right to the Simplified Volatility Premium ETF Fact Sheet, or SVOL. It says this ETF seeks to provide investment results before fees and expenses that correspond to approximately 1/5 to 3/10 the inverse of the performance of the CBOE Volatility Index, or the VIX short-term futures index, while also seeking to mitigate extreme volatility. It then says the fund's short VIX positions provides investors an optimized exposure for monetizing the premium in the VIX futures market, but along with that, a modest option overlay budget is then deployed into VIX call options to help protect against adverse moves in the VIX. So here are the key points. The first ETF to provide an inverse VIX exposure coupled with a dynamic hedge. And what this means is that even though this ETF primarily gives you exposure to shorting the volatility index, which means that as long as volatility is going down, this ETF is going to have some great performance. But along with that, the modest option overlay, budget deployed in VIX call options, also can save you if, of course, the volatility index spikes up. Now it also says 25% short VIX exposure helps to balance trade-off between high income and volatility drag. Deep out of the money VIX call options seek to provide low cost protection against extreme VIX spikes. Also, this ETF offers multi distributions and no Schedule K1, which we love. Now, one of the next main things I want to talk about when it comes to SVOL, and this is one of the reasons I'm particularly somewhat bullish on this ETF, and this is why I hold on to it. This ETF, as of right now in the portfolio holdings, what do you see here? You see a lot of different holdings. Not everything is just shorting the VIX. You can see that they do have some VIX short positions on here, but along with that, there's tons of other things going on. There's things like US Treasuries, which of course are pretty safe. There's also different bond ETFs, like the Simplified Aggregate Bond, or ticker symbol AGGH. There's also another Simplified Treasury ETF like Ebook. And as you go through here, you can see that they hold on to a lot of different positions. So even though this ETF is sort of known for shorting the volatility index, which a lot of investors think is very risky, this ETF does of course give you some exposure to that, but also gives you exposure to things like ticker symbol IVV or ticker symbol Ebook, which is relatively safe. Now, of course, this could change in the future. This ETF's holdings could change dramatically. I'm not saying this is how it's going to be forever, but as of right now, at least in my opinion, if you look through all the holdings, this is a relatively safe portfolio, which is decently hedged and has the potential to generate a ton of premium and some downside protection along with it. Now, the next thing we have to talk about is the fact that this ETF unfortunately did just as of recently drop their distributions from 30 cents per share per month, which is what we saw for a while. We even saw 32 cents back last year. But ever since I bought into SVOL, I was getting 30 cents per share per month. But as of recently, back in September, we saw it drop to 28 cents per share, which is a significant drop, especially if you're like myself and you own, say, hundreds of shares. Now, I've yet to hear exactly what the reason being on why SVOL dropped from 30 cents to 28 cents per share per month, but I'm guessing it has a lot to do with the holding breakdown and the fact that there's a lot of bond exposure. And as we know, bonds have become a little bit less profitable with the Fed cutting interest rates. Now my take on this is pretty simple. A 28-cent distribution, even a 27 or 26-cent distribution, is still a 14 or 15% yield, and as long as SVOL trades more or less sideways and gives you some exposure to all the things it gives you exposure to, I still personally think this ETF is worth holding on to, but again, I could be wrong. Now also sort of another negative for SVOL, it is down around 17% in the max time frame. Now to be fair, when I started buying SVOL, it was trading around $20 per share, and it's basically trading a little bit less than that right now. So since I bought into SVOL, I think I'm down very slightly on my shares, but it's more or less traded sideways and paid me massive distributions every single month since I held onto it. I absolutely despise different ultra high yielding ETFs and stocks for that matter that are going to pay me a massive amount of cash flow, but decay and decay and decay over time. Now maybe that's because I have flashbacks of buying into QYLD back in the day at around $20 per share. QYLD is another one that's paid a massive amount of cash flow to me very consistently over time, but as you can see right here, the actual ETF price just keeps going lower and lower, making my overall portfolio lose more and more value over time. Not to mention, if we were to look at SVOL's performance since its ETF's inception, which is around 3.45 years now. Which, side note, I like the fact that some of these ultra high yielders, some of these different ETFs that have been coming out as of recently, it gives me a little bit more peace when I can see 2 years, 3 years, 4 years, or 5 years of history, not meaning that what happened in the past is going to happen in the future, but it just gives you more data to work with. So SVOL over the last 3.5 years more or less still has returned investors around a 10% average annual total return, with the distributions being reinvested, or around a 7 or 8% with them not. Now, I personally take this as a win. I say this because something like SVOL, I never look at an ETF like this one that yields, say, 15 or 16%. I never look at something like this and think that it's really going to outperform the S&P 500. I look at it as sort of an income tool and an ETF to have within your portfolio, along with a lot of other ETFs, of course, and other stocks, and utilize it for income potential. Use those tax-efficient distributions and invest into something like SEHD, something like VOO, or really whatever the case might be. So the fact that this ETF has returned investors 8%, 9%, 10%, as far as an annual return, at least so far, I personally do not have any problem with that at all. Now, with that all being said, I am going to closely watch the portfolio holdings when it comes to SVOL and go through any literature that I can find and try to come up with an idea on what the future of this ETF really is going to look like. Along with that, if the distributions keep shrinking down to 27 cents, 26 cents, 25 cents, there probably is going to be a point to where this ETF's money invested could possibly be better invested somewhere else. But all in all, SVOL is still in my portfolio as of right now. Is this my favorite ETF across the entire market as of right now? Absolutely not. But is this ETF an income generating ETF that's done pretty well for my portfolio since I started buying it? Well, I would say absolutely. So now that we went through SVOL, I share with you guys some new important findings like the portfolio holdings and of course the fact that the distributions were decently cut in the last few months. And I also share with you guys the fact that I personally do like this ETF, at least as of right now. I want to hear from you guys down below. Is SVOL personally something that you would hold in your portfolio? Do you hold onto it right now? Or if not, what other ETFs similar to this do you like? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.